Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to bring you a trade setup in Walmart and tell you why. I'm going to bring you short-term analysis of the widely held. That's 48 stocks in minutes using askSlim proprietary studies. You're going to be amazed how fast I do this. And also, I'm going to bring you my analysis of the stock market. How far will this rebound go? And you can see our proprietary indicators at work and get ready for what could be another big drop.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market investors got a lot of bad news last week, and the reaction was different than in previous weeks, as bad news was bad news. However, a midweek selling squall was reversed by a late-week recovery in the indexes, as stocks that were very beaten up started to look cheap. In the background, Chinese troubles got worse as Evergrande was halted, founders in custody and suspected of some crimes, probably something to keep it afloat. World's most indebted property developer, that's Evergrande. And, we all know that China built a lot of condos that sat empty for quite a long period of time. In fact, thousands of them. That's that old Keynesian adage that you can just simply hire somebody to dig a hole and then hire somebody else to fill up the hole. And then you have something. You can pay them for that. And that's stupid stimulus. And we do a lot of that in this country, too. But pressure was on Chinese stocks, and that hurt equities worldwide. Big issues here in the U.S., well, rates moving up and sharply. And that mantra we hear out of the Fed, higher for longer, still resonating with investors. And they're doing that while the economy is slowing. And of course, money market rates now up around 5.4%. That's big competitions for stocks. And the dollar is moving up, and that's bad for multinationals, as a stronger dollar means that multinationals have lower earnings. And then we have Fed QT draining liquidity, and the big disparity that we've seen in the equities, and I showed that graphic last week, that historically when the Fed is draining, well, that affects the stock market in a negative way, but that kept rallying, and there's something to be corrected there. And oil exploding to the upside, and that is inflationary. And with economies slowing down and oil prices going up, and other inflation still being sticky, well, that is stagflation. That all puts pressure on earnings, and just to add to that, Amazon, they got sued by the FTC for antitrust, saying that they have had a monopoly in retail. And of course, they earned it. There's a pending government shutdown, and of course, that's scary for investors, but historically, that has not been bad for stocks. I'm going to avoid my political comments on that, though I certainly have opinions. Our work showed that the stock market would be moving to the downside, and it was perfect timing for all of that, including the rebound that's going on right now. And all this negative news that we have seen is just really an excuse for a market that was ready to do what it did. And that stock market decline, that did set up the short-term low that we were looking for, and now we're in a rebound. And I'll show you in a few minutes why this rebound is very likely that it's doomed to fail. But the question is how high the bounce and how deep the next decline. I'll show all of that to you too in just a few minutes. Right now, it's easy to get hooked. Here it comes, new highs, market moving up. And I'm afraid to miss it. But what I'm suggesting to you is it is time for the biggest odds in our work is that there will be a capitulation first before the market starts to look really better again. And then, as we have shown, and I will show you a little bit later, that the best chances for a decent market rally are probably November, December, out towards year end. Stocks for the week, well, they're slightly mixed. We have a movement in the S&P 500 and the NASDAQ, which is about unchanged, maybe up just a little bit, depending on where it ends up. Right now, we're recording this at late morning. The Russell Index actually gains about over 1%. And if you were following our analysis or you saw our live event last week, which the recording is now up on YouTube, I showed the OBI, the option bias indicator, which said that the Russell was likely to bounce sharply, and that was extremely oversold for the short term. And now we have the Russell up, for the week, while the other indexes are not, and actually the Dow is down small for the week. Bond market, wow, almost 4 points to the downside, and that's after a big bounce on Friday. 10-year yields up about 9 basis points, and they're at about 4.52. They were up to 4.69, and that really is scaring the markets, of course. Scaring a lot of the markets because the higher interest rates brings the stronger dollar, and that weighs on the metals. Gold down over $50. Silver is actually in a stronger pattern, still down about 45 cents at the week at this point, and that's after a huge rebound here on Friday for the silver market. Dollar gains about 0.3%. It was much higher, and the oil market was also much higher, but still it gains $1.25 to about $91.50, and that traded up to $95. We think there's a correction, a little further correction coming in the oil market, but then potentially a move up to 98 to 102. And you can see that analysis, so you can see all of our analysis by becoming a level 2, 3, or 4 member and watching the Future Speak show every Wednesday. Ari does just an amazing job with that show. That's it for the opening. I want to make sure that you go to our website and explore over at askSlim.com. Get acquainted with us. You can become a level 1 member for just $45 for 3 months, and you're going to get information on the indexes from us every single day. YouTube, subscribe to the channel, click the notification bell, and then you'll know when we post videos. And like this video, give it a thumbs up. On Twitter, and let's say on X, follow us at askSlim. And for questions on anything I'm going to show you here, on our membership, on our education and analysis, please write to Matt at askSlim.com. This is Katie. She's going to do trade planning with options, and Katie's going to share a bullish options trade idea in Walmart. She'll show you how she combines our cycle analysis with option strategies, and this is absolutely fantastic, whether you're an analyst and like the technical side, or you're quantitative and like to do the option side. She puts it all together, and she's going to show you how to open up a Tasty Trade account, and that helps us, and it will certainly help you with bonuses, so don't miss that. Please open up that Tasty Trade account through our website at the top of the main page. Katie, show them this great analysis.
Hi, this is Katie with askSlim, and this is Trade Planning with Options on September 28th, 2023. Today we're going to look at an options trade idea in Walmart. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get started. Let's first take a look at this weekly chart of Walmart. We are in the rising phase of this cycle on positive momentum. Momentum is shown on our weekly charts with our proprietary momentum indicator, the reversal scout. That's this green and purple ribbon on the chart. We are pulling back now into this upper support zone and also using that 13-week moving average as support. Now for now, we have a price target around the $168 area, which is approximately the 50% fib extension. So overall, a bullish condition currently in Walmart. Let's switch over to the daily chart. Now here, you'll notice that Walmart is in the daily cycle timing window between these blue vertical dashed lines. So we retraced to the middle of the support zone yesterday, possibly forming the daily cycle low. We do have a reversal scout though that turned negative as Walmart came into the declining phase of the prior cycle, and our slim ribbon turned neutral yesterday. We would like to see those momentum conditions improve, and we are targeting the zone from the prior cycle high at 165.85 up to the 61.8% fib extension at $167 in this next rising phase. We're going to go over to the Tasty Trade platform, but first, please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. They are our preferred options trading platform, and if you open an account with them through our link on this page, that will score you a special bonus, and it will also help us. So Walmart has an IV rank of 18.7 with implied volatilities in the teens in those expiration cycles. I have the askSlim focus list as a watch list here on Tasty Trade, and I've sorted it from low to high IV rank. And as you can see, Walmart is on the low end considering the market decline that we've had recently. So we're going to be looking at a long premium trade idea. And our time frame is short term, looking for that move over about the next 2 weeks. So let's go into that October 13th expiration cycle and let's set up a call debit spread. To do that, we buy an in-the-money call. I'd like to use something around the 70-ish delta. So let's buy this 160 call. And then we're going to sell an out of the money call against that to reduce our cost basis. So let's sell the 165 call. Now this sets up a $5 wide call debit spread. We are paying a debit of $2.68. That's our max loss and our capital requirement to place the trade. Our max profit is the difference between the width of the spread and the debit paid, in this case $231. Now our probability of profit it's about 50%. This says 47%. We are picking up about 35 long deltas. Now here is the risk graph with our profit zone in green and loss zone in red. We want Walmart to move up, and we can take this trade off using either a price target between, as I mentioned before, 165.85 and about 167, or you can also use a 50% of max profit target. Now for an entry signal, we're going to look at the lower time frame chart, the 2-hour chart. What we're waiting for is for the reversal scout or the slim ribbon to turn positive to activate the trade idea. When that happens, we'll post on our Discord channel, and you can also check the status of the trade idea by clicking here on the Options Trade Idea Tracker. That is our options trade idea today. As always, please feel free to reach out on Discord or email to katie@askslim.com if you have any questions or.
That was fantastic. This is some special short-term analysis maybe you've never seen before. We're going to look at 48 top weights and high flyers in minutes. This is level 4 studies using the slim ribbon PO and the option bias indicator. And I think you're going to find this really interesting. I use the first chart just to give you an example of what we're looking at here. This is the slim ribbon that you see right in here, and it's an area chart, which then gives you a real good look at when something is in positive, negative, or neutral momentum, green being positive, red being negative, and that purple right over there being neutral. Also, we're looking at the slim ribbon PO, which is colored the same on the bottom, but that gives you resumption signals, as you can see when it's positive right there, or when it's negative, as you see right over here. And on the bottom is the option bias indicator. This is a very unusual indicator because what it does is it tells you when something is positive and when you should bias on the long side, when it is slightly positive but slightly overbought, as you can see, or negative and slightly oversold. Also, there's an orange dot that shows up when it's very oversold and a reversal is pending. Now, looking here at Apple, what you can see is that it is negative clearly. Slightly oversold over here and potentially could bounce, and often the slim ribbon is support or resistance. So we would expect, as you see right over here, as it got into the slim ribbon and rejected, it could do that again. So maybe it bounces up here to about 173 to 175. And then begins to move down again. So what I'm going to do is I'm going to fire through 48 total stocks in this category of high flyers and mega caps and heavily weighted stocks, and you will be able to see this analysis. And I'll go through it very, very quickly, as you will see, looking at all these stocks. Here is Applied Materials. You can see that that is negative, slightly oversold, really getting up to the slim ribbon. Maybe it gets up to 140, 141, and then begins to go down again. Next one is AMD, Advanced Micro Devices, a similar situation, slightly oversold, already bouncing into the slim ribbon. Maybe it gets slightly higher than that, but it is likely to move down again, and I would expect that we would see a red downside arrow over here pretty quickly, telling us it's ready to resume on the downside. Here's Amgen. Look at this stock. Bullish, giving you bullish readings on the option bias indicator and also on the slim ribbon PO, giving you those upside resumptions. This is not a stock that you would want to be short. That's Amgen. Amazon, well, that was super positive. Look at that slim ribbon PO giving you these warnings of upside resumptions, and the option bias study saying keep your options biased to the long side. Well, that was till right over here, and now it has turned negative. We could get a bounce up into here into about 130 potentially, but then it is likely to roll over after that, maybe as high as 133, but that is a negative stock. Here is Broadcom. You could see that is negative and likely to give you another negative signal very soon. Boeing, super negative. Now look at these orange dots over here. This is very oversold, likely to give you a bounce, maybe up to 198 to 200. And look over here what happened when you got these extreme overbought condition signals. That gave you the top in the market right over there. So that is an excellent indicator. Next is Baba, Alibaba, clearly negative. You could see it failing in the slim ribbon right over there and getting negative readings everywhere. Note the slim ribbon. Note the option bias indicator giving you that top warning right at the top and the bottom warning right at the bottom over there. So an excellent indicator that you have there. Here is Baidu, negative, giving you downside resumption signal. Maybe it gets up to 134, 135, but then back to the downside. Caterpillar now turning negative after it was positive for quite a while and giving you a warning. It is likely to move back to the downside pretty soon. Look at Costco. Super positive, upside resumptions on the slim ribbon PO, positive momentum, and making a new high in there. Imagine that in this market now. That is a very positive stock, and you got to wonder why anybody would be short this one right now. Here is CRM, Salesforce, negative as you can see, slightly oversold, probably going to bounce to about 206, 209, and then back to the downside. CVX, look at that. You know the energies are very strong. Look at those positive signals and look at the option bias indicator as it gives you this signal that it is likely to give you a short-term reversal to the downside. Notice how it gave you the bottom warning right over there. Absolutely perfect. Here is Deere. That is slightly oversold, likely to give you a bounce to 390 to about 397 and then back to the downside. Here is Disney, looking negative. And look at that OBI on the bottom, just telling you to stay on the short side through those periods. Likely to bounce here maybe to about 81, 82, and then down again. FCX, that turned up in here after being negative. Look at that slim ribbon PO. That's likely to give you a reversal to the downside pretty soon. Maybe this stalls somewhere around 38 in Freeport. Here is Federal Express. Look at this. This is a positive look to a stock. It's neutral here on the OBI. It's actually yellow, as you can see right over there. And this turned green, turning up, and this is positive. So this is not a stock you would choose to be a seller of. First Solar, negative, likely to give you a downside resumption pretty soon. Maybe it gets to 167, 168, right in that area. Google, you can see there, that one has turned negative, likely to give you a downside resumption. Just take a look at those readings on the OBI as it was giving you that positive there most of the way across and telling you to put your option positions to the long side through that whole period. Now it is neutral right over here, and this is likely to turn down again, getting back up to the slim ribbon, maybe 132 to 133, and then down again. Here is the Goldman Sachs. This looks negative to us also. Neutral on the OBI, negative on the slim ribbon and slim ribbon PO. Maybe it gets up to 328 to 330 and then down again. Home Depot, you can see the story there. That is negative, potentially bouncing to 308 to 310 and then down again. JP Morgan, this one negative, looking like it should fail from very near here, maybe 148, 149, and then down again. Southwest Air, anything get clearer than that? Look at the bottom, see the OBI, see those orange dots? That says extremely oversold. Maybe it gets a bounce to 28 and then down again. LVS, that looks pretty sick. Look at those red arrows telling you on the slim ribbon PO to the downside through that whole period. Great readings there. It is slightly oversold, likely to get further bounce. Maybe we see 47 to 48 and then down again. McDonald's looking extremely weak, though it is very oversold. See this extreme oversold, says a resumption, says a rebound, to the upside. Maybe you get to 169, 170, and then down again. Meta, this is looking strong. I don't really like this stock or the company, but certainly their hopes on AI is keeping the bid in there. We'll rate this one really around neutral. I don't see a trade. Morgan Stanley, like Goldman Sachs, looking negative, maybe bounce to 84 and then down again. Microsoft turning negative with the other high flyer mega caps, potentially bound to about 120 and then down again. Micron, this one just turning negative, as you can see, turning negative right over here, turned from positive to neutral right here, and then just turning negative right over there. So this one just developing into a negative stock. Newmont getting hit again. It was turned to positive, but now with the gold market doing pretty poorly, it has turned now again back to the negative side. I don't really see anything in here of significance in there. Netflix, clear as not. Look at this. This tells you a downside resumption. It resumed to the downside right in there. Maybe it can bounce up to 385, 390, somewhere in that area in a bounce, but then likely to be moving down again. We have gone through a big portion of the list, as you can see very quickly. Negative situation there in Nike. Maybe it gets to 91, 92. Oracle, this one getting ready to turn down. Oracle is right here. This one looking negative, as you can see. Maybe it gets to 108, 110. This is another metal, PAS, looking very sick right there. I don't see much of a trade at this level. Pepsi right there. Oops, we've got some cycle lines on there. This one looking negative and like it will try to rally, but then fail. PayPal, same situation like the other tech stocks. This one looks to us like maybe it gets to 59.60 and then down again. Starbucks, same situation, negative. Look at that OBI on the bottom. That looks pretty terrible when you look at that. And looking for a bounce potentially to 92, 93, and then down again. Square, this one similar, maybe gets to 47 to 49. And then down again. Note the option bias indicator here telling you it is extreme oversold, so we'll look for it to tick up into this area right there. Look what happened here when you got all those readings of extreme overbought, and that made a market top. So you can see on there. Here is a strong stock, T-Mobile, very clearly there. Not looking like you'd want to be short in that one. Here is Toll, definitely getting hit based on these higher mortgage rates and looking like maybe it could get up to about 75, 76 and then trouble. Tesla turning negative, as you can see right over there, and now probably getting up to somewhere in the slim ribbon right up here, maybe 250 to 253, and then trouble. United Airlines, there you can see, pretty sick looking. Look at the bottom, OBI, orange, telling you a bounce, maybe to 44, and then trouble. Uber is negative. It's gotten back to the slim ribbon. It seems like this is the place where it's going to struggle. Here is Visa negative, maybe back up to 235, 236, because you can see it is extreme oversold looking on the bottom, and that would be it on that. Walmart, this is a stock that's been looking good. The cycle patterns are good. It's neutral right over here to positive as you look at the OBI, and option bias indicator positive. And take a look at what Katie is going to teach you on this today, as she has a positive option trade to do in there. Here is Win, and that one's not looking great. This looks like a sell right around 92 to 94. And Exxon, the last one we're going to look at in here, very clear, very clearly, very overbought, as you can see. Look way over here where you got that overbought signal right at the top, that was pretty clear. And now it is overbought right over here. If there are liquidations still going to continue in the market and oil gets a pullback, then this stock is likely to give some ground, maybe pulling back into the slim ribbon, 117 down to about 115.5, and that would probably be a buying opportunity. Look what we just did. We just went through 48 stocks in minutes using these level 4 studies. Make sure you take advantage of our last 3 days of our level 4 special, and you'll be able to put these right on your own computer. That is short-term analysis on the 48 top weights and high flyers just in minutes. This is the last 3 days of this level 4 special. It's first-time subscribers and upgrades get this amazing pricing. You're going to get every single thing that we do for just $99 for the first month. That's $37 off the regular price of $159, and that includes all of our proprietary indicators and everything we put out there. And you're also going to get our new MCM, the Market Condition Monitor, that is just mind-boggling. It's our new app with our algorithms built in it, and that is our entry into AI, which is just fantastic. And of course, we all know it's going to change the world. So this is important for you to see. Everything that's on this page is included. I'm not going to read it to you. There is a ton here. You can get all the information and examples of that by going to the top of the askSlim front page. Click that Learn More button, and you're going to see how to sign up for this and what is included. Just a lot of examples in there. Click that Learn More button at the top of askSlim.com. If you have questions, write to Matt at askSlim.com. Stock market analysis and projections on the S&P 500. Please do read this slide before you go and look at that, because this tells you our approach to the markets and what that means for you as you use our information. One more announcement here that you just can't miss. I'm going to be speaking at the Wealth 365 Summit. You can see 60 top name market pros in 6 days. These are a lot of the big names that you know. I'm going to present October 11th at 10 a.m. on riding the big impulses for greater profits, plus the biggest issues that prevent consistently successful trading. I'm going to go into a lot of that psychological stuff and important things about how you do your analysis. Do not miss this. It's free. That special offer is at the end of presentation that you're going to see that announces the new day trader service, and you're going to just be mind-boggled. It's mind-boggling, really, what that is like for short-term traders. Plus, we're going to give away a cycle analysis workshop. Sign up at the top of the askSlim.com front page. This is the front page right there, and you can see on the right side, Slim Speaks, and the Learn More button. Click on that, and you'll be able to sign up. And also, don't miss the opportunity on the left side to see the information on our Level 4 trial, of which we're in the final 3 days right now. So please do go to the website and get your information right here, and sign up to see me speak on Wednesday, October 11th, at 10 a.m. and you're going to love my presentation, especially if you're a short-term trader. All right, stock market, S&P 500. We're going to do some short-term analysis here, and we're going to look at some of our proprietary level 4 studies that I think are always extremely valuable. And of course, we have a lot of members that use those every single day. So let's switch over now to the charts, and we'll go here to the S&P 500. We are looking at a daily chart, and this is cycle analysis. I always like to just speak to what that is at the beginning of this because there are so many new people that watch this every single week. What you have here on the bottom are called cycle brackets. This is a drawing tool that just simply gives us the energetic rhythms in the market as if they moved in an ideal fashion, where you had a cycle that rallied, it peaked, and it declined, and then it bottomed right in here. That's that cycle that you can see right in there. And you'll notice the shape of it was bullish and that it rode the slim ribbon on the upside, one of our proprietary indicators, which often happens. When the slim ribbon is positive, it colors the bars green. It colors the slim ribbon PO green on the bottom. And these arrows tell you when there is a momentum resumption in that direction. As you could see right here, spot on, here, spot on, and here, not so spot on. It actually warned you when it turned blue that the market was changing. Then it turned negative, as you can see. This is a great indicator. And you can see right now it is negative and getting up to where it could give you another downside resumption right here. See how wide the slim ribbon is right here as it's moving down? There's a high probability this will resume to the downside. Now let's talk about the cycle patterns. And you can see in here, positive cycle made a left shoulder right there. This cycle right over here made the head. And this big cycle right over here is what's the dominant cycle in what we call the harmonic family. There is a minor third, which is actually the formation of the Russell, and that's that green bracket. This, you could see, was a lower low than here. That said that this was a negative cycle, and the next cycle would likely fail in resistance. It did so. And then when it turned negative and resumed to the downside, this turned red. That gave you the warning the market was going to move down, and it made a lower low. That says it's very likely to fail in that resistance area. Let's blow this up again right there, and you can see that we have several projections in there. This makes up a several tracks that kind of gives you that cloud look to it in here, where, you know, if it was really strong, it would get up to this area here. That is the lowest probability of occurrence. If it was just modestly strong, it would get up here, and the rebound would take you to around 43.88. And this is the greatest likelihood, and that's why it's thicker with those arrowheads, and where we believe it will stall right over here around 43.53 in this rally. This rally could last for another week or week and a half or more, but then you get into this period of risk, which is the last 3 weeks in October, as you could see there. And this is likely to be another downside move with the potential for it to be equal to this or greater, as it's probably going to contain a capitulation near the end. So we are very concerned, and that's why I showed that graphic at the beginning of the show about taking a defensive posture, and that means don't chase this like you believe it's going to go to new highs in the markets. The probability of that is very small, whereas the probability of it failing in this resistance zone and then moving down again sharply is very high. There is a strong likelihood, I'm going to say big odds, that the best area to be buying will be out there in late October or early November when this begins to turn upward again. You can see our downside projections right in there. That is coming down to this level here of about 4,100. There's a potential for support here at 4,200 where it got close there, as you can see. If it does a little better here, it might do a little better to the downside, but again, the highest probability is this one here. And then this is at around 4,110, and the head and shoulders measurement takes you down to around 4,070. Again, that head and shoulders formed in there, as you can see right in here, where the cycles form that, and that's what happens. Cycles form these patterns, And that's very clear as you look at it right in there. So negative conditions that we see in here with momentum, negative cycle patterns, and it says a failure is likely coming. Let's look at a couple of other charts where we're going to look at our proprietary indicators, and we'll look right here. If you watch earlier in the show, I used this chart for the purpose of looking at 48 individual widely held and mega cap stocks doing this kind of analysis. What we're looking at in here is a slim ribbon, and it's in an area chart. So it really screams at you what the conditions are. And again, the slim ribbon PO on the bottom giving you the upside resumptions, and when it's negative, and it's negative right over here. What often happens is that the slim ribbon creates support or resistance. You can see in this rally in here how it did that on the way up, and you can see right here where it failed right there in the slim ribbon. It gets slightly above it there, and when the slim ribbon lays on itself, it's really neutral. You don't really have great signals there, and you can see here that it's coming up back to the slim ribbon. This is 43.30. This is at around 43.56. That's kind of the areas that's likely in here, though it could get up to that area up here, which is around 43.80 to 4400 in this rebound. Again, this is showing you that it's negative here, and with the slim ribbon widening right there, you're likely to get a downside resumption, red arrow in there, which will tell you that there is a problem. Also look at the option bias study on the bottom. This is a great indicator. This essentially tells you how to keep your option positions, and when it's in this dark green top right over there, that is a +3 rating. That gives you the strong likelihood that the market's going to continue on the upside. When you get the light green, it starts to warn you that there is a slightly overbought condition, but it is still positive. And you can see that it remained positive here. That's yellow right there. It's neutral, and then it turned negative. It went back to neutral right here, even though the momentum went green. And now you can see it's just slightly oversold right there. So you're getting little indications that it might be able to put on a rally. If there would be a little orange dot in here, it would be telling you of extreme conditions, but it's not on this chart. But if you go back and look at the earlier part of the show where I do the analysis on 48 stocks, I'll show you how that amazing orange dot shows up and really gives you an indication where the market can put on a reversal of some significance. So that is the conditions that we're looking at here in the stock market, looking at the S&P 500, negative, likely to get up into that slim ribbon area right up over here, and then turn lower again. One more chart that I want to show you here is a 2-hour chart that has another proprietary indicator on there, and also has let me just fit this in here nicely, and also has a look at the cycle patterns on the daily chart overlaid on a 2-hour chart. So in this case, what we're showing you is the slim ribbon at work on a 2-hour chart. And these cycles are the cycles that I showed you on the daily chart, but this again is a 2-hour chart. So it's 2-hour with a daily overlay, and on the bottom is the askSlim market condition indicator. This is a multiple time frame indicator that weights the longer indicators more. In other words, if the longer indicators, which have dominance, prevent it from turning positive or negative, there's a message in there. In this case, when it got into the swing zone, which is between +25 and -25, it tests it. But then when it turns around and goes positive again, it tells us that the longer, more dominant inputs are strong enough to keep the market up, and there's a buy situation going on here, and you could see that was the occasion right over here as it stayed strong through that whole period, running here between the area of 75 and 100. This is all positive conditions right in here. Then it started to roll over. It tested the swing zone, turned positive, as you can see, as you got into this rally, but then it tested it again and moved through the swing zone and went negative. What that tells you is that the longer, more dominant indicators are in negative mode. It says that the longer holders are actually selling, liquidating, and it gives you an indication of the problem. Now you see we're way down over here. That's at minus 96. And under that condition, it's very likely that when it gets into that sell zone, and this is the bottom of it is 43.50 to about 43.86, and the outside here is about 44.25. That's comes off the daily chart. And those are the areas that we believe that the daily slim ribbon is also going to be a problem. This is very negative. When you look at that, it says that the rally is likely to fail. And I've showed you different variations of that, right, as you see it here, as you see it right here in the negative conditions right there, and as you see it in here on the daily chart, pointing in here. So what this says to me is that the market is very likely that it's going to continue this rally some number of days, maybe even a week, week and a half, but then turn lower again, and the risks still remain high. Those of you that are following our longer-term analysis know that our period of risk suggested that it would remain into the period of late October, just as we're showing the daily patterns right in here. And that analysis is important to look at. Remember that our members, levels 2, 3, 4, they all get different variations of our chart. And if you become a member, you will be able to get our full analysis, weekly and daily, and much more on these indexes. So you need to become a premium member at one of the important levels, and you can look at askSlim.com and see what you get in each of those levels. So it's really important that you go and take a look, because these indicators, as you can see, are just phenomenal. That is the lead-in to just remind you again that we only have 3 more days now to our level 4 special. Everything you get, everything that's on this chart, everything we do, level 4, 3, 2, and 1, including our new market condition monitor. $99 for the first month. Just click the Learn More button at the top of the website at askSlim.com, and you'll be able to see that. And don't forget to sign up for my presentation at the Wealth 365 Summit and see me and 60 other fantastic presenters at that summit for free. Go to askSlim.com, take a look around, subscribe, become a level 1 member for $45 for 3 months if you want to. And on YouTube, subscribe to that channel. Like this video, give it a thumbs up, and watch some of the member videos in the playlists and past shows. On X, follow us at askSlim. And any questions you have on anything that I presented, please do go to your email and write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.